Hello guys, let's begin this session. This is a public session lah. Okay, so we have people who managed to see the link from be it Facebook or public Discord channel or wherever lah. Okay, so if you are here, I'd like to thank you guys for joining the Thursday night with me. So this is a ask me anything question. Of course, in this case, when I say anything what I mean is trading related lah. Okay, if you want to ask me like what dish do I like to eat, those kind, I mean, okay, I can still answer lah, but of course it will bring no value to you lah. Okay, so I used to do this quite often in the past, but I realized that if I do too often, right, people will run out of things to ask lah. Okay, so sometimes I can't do this very often also, but once in a while I will receive a lot of trading related questions through be it Facebook Messenger or private message through Discord or wherever, right? I do think that it is good to have this kind of like a chit chat session with the public lah. Okay, I know there are a lot of people who see my posts. They are like very silent lurkers. They don't really talk. They don't really comment, but they just sit there, just read silently only. But I think it is good to sort of like voice out anything lah, like whether if you have any questions or any comment, the engagement is good lah. Okay, so I want to treat this session as like a more of very casual, very chit chat session lah. Okay, so if you want to ask questions, you can I will highly request that you type out the questions lah, then I'll be able to slowly read it. I'll be able to reread your questions because I do not want multiple people speaking at the same time, and then it's very hard to coordinate also lah. Okay, so just type in the Zoom chat, and then I will go through them one by one. So this session, whether it is going to last 1 hour or it's gonna last 10 minutes, it will be dependent on you guys. Obviously, if there is no question being asked, then I have nothing for you lah. Okay, so I did mention that at the end of today's session, I'll be sharing two potential traits that I believe are high conviction, or at least for me, in my opinion, these are high conviction trade that I think can earn a lot of money lah. So I'll be sharing that at the end of the session. So if you want to know what are those trades, then do stay until the end lah. Okay, so let's begin. Wait, let me remove the. Okay. So just a little bit of introduction about myself for those who do not know who I am, or for those who doesn't know me, or who know me but you just want to know more lah. Okay, so this is my CV. So academically, I have a bachelor degree in molecular biology. I have a bachelor degree in chemistry and biological chemistry also, or biochem lah. Okay, so mainly biology and chemistry lah, and I have 14 years of pharmaceutical experience in pharmaceutical industry as a molecular biologist and then chemist. So my last company that I work for is Roche Holding, the Swiss pharmaceutical company, and it was and is a very good company to work for, very good benefit, and in fact I saw myself retiring there lah, like work until retire lah. But at some point I realized that hey, I really do have a passion for trading, and I felt that I could survive trading full time. So I actually left Roche in 2021 in order to trade full time. So in terms of my trading background, of course, like everyone else, I am a retail trader. Retail trader means you do not have a professional license lah. If you want to like split hairs, if you have a professional license, then you are a professional trader lah. So I started trading in 2013. I start off with 30K. 2016 was my first profitable year, meaning to say that prior to 2016, I was losing a lot of money lah. In fact, I actually lost 25,000 of my initial 30,000, and I have to top up. I have to top it back up back to 30,000 by saving more money. And in 2019, my trading account grew to 90K, And in 2021, I actually left my full-time job at Roche and I became a full-time trader. And at the same time, I also had an internship as an analyst in a London-based hedge fund is incorporated in London lah, but the portfolio manager, the directing manager occasionally visits Singapore also. Currently I am under NDA with that particular hedge funds lah. Okay. And also in 2021, I founded Nimbus Capital Solution, which is this current company, a trading education company. And my trading account by 2023, it has grew to 200K. And in 2024, I founded a private fund called Protege 9 Holdings. So this is a private trading fund lah, where I pull together a large source of money and I'm trading that money for capital gains lah. So 2025, I am currently managing multiple trading accounts, both my personal trading account and the private funds, with a combined asset under management of 800K. So of course, 800K, if you want to look at industry level, it is not really a lot. In fact, it is a tiny drop because if you look at bigger hedge funds like James Street, Point72, Citadel, JP Morgan, Goldman Sachs, the funds are in billions of dollars. Okay, but I mean, we do have to start somewhere. And in fact, if you want to go higher, right, you have to prove that you can actually manage a fund before you are able to sort of get yourself into like a very big hedge funds, or in order to get a proper um, fund management license, you need to show that you can manage funds lah. So my personal goal in the next 10 years is that eventually once I am able to manage this current fund to a appropriate level, probably like 1 million, 2 million, that kind of level, show that I have consistency and discipline and I understand regulatory, I will be getting a fund management license. And then by then, I'll be probably able to accept customer who want to pool their fund with me, or I'll be able to create my own ETF and then get it listed on Nasdaq or somewhere lah. So that is my personal goal lah. Okay, so area of expertise. I trade the U.S. market, mainly the U.S. market, because there's a lot of choices. There's sufficient volatility, but more importantly, informations are readily available. If you want to trade something, you need to trade true information, news, um, earning release, earnings document, regulatory document. So all these are very important when you are doing fundamental analysis. The reason why I do not really trade China market is because they are not really transparent in how they release their data to the public. Sometimes certain China company, when they release their earnings report to the public, they don't release it in a timely manner, or sometimes certain information are very very hard to find. But I am not really that fluent in Mandarin also, so if I'm gonna read a 10K document on a China company that is incorporated in China, not really listed as a ADR on US, right? Then I will have a very hard time. Okay, so US market is big enough to sort of extract as much alpha gain as possible without really putting in the additional effort of going through all these hoops in order to trade the China market. So quantitative and qualitative macro analysis. So macroeconomic analysis is very important as a trader, not just for investor, but as a trader, you also need to understand what is going on a macroeconomic level. Okay. So now what a lot of retail trader, and in fact a lot of what I would call fake guru, charlatan gurus, they are only proficient in quantitative analysis, and proficient is putting it very generously already. For example, I'm sure you all have seen all this kind of posts online where somebody will post a chart saying macroeconomic analysis, and then the US, the United States credit, consumer credit is at the all-time high, and then they consider that a macroeconomic analysis. Or somebody will post the housing price over GDP is at the all-time high level, and then there's a bubble forming, and they think that that is considered a macroeconomic analysis. Or a lot of people will post things like the Federal Reserve balance sheet is at the highest, or they are doing quantitative tightening, they are slowly selling down all their treasury bills, or the US M2 money supply is accelerating, blah blah blah, inflation high. So a lot of the retailer version of macroeconomic analysis is looking at all these numbers, looking at all these charts, and then they try to form a thesis by them, try to form a trade thesis, or in fact, sometimes there is no trade thesis at all, nothing to convert the analysis to a actionable trade. And what many retail traders are lacking is the qualitative aspect of macroeconomic analysis. So, for example, in the most recent Trump situation we have ongoing, Trump actually passed what they call the Big Beautiful Bill. And within this Big Beautiful Bill, there's a lot of, I would say, stimulus. It's basically a stimulus tax package lah. And within the package, there's actually tax relief, or there's some funding that is they are raising money to boost up US defense spending. And with that additional funding going into defense spending because of this Big Beautiful Bill, um, I am actually quite bullish on quite a few defense stock. And in fact, one of the stock that I was bullish and I actually shared with my internal member was Boeing. And in fact, Boeing has been up about 13% since the last one month, like that. So these are what we will call qualitative. We are looking at certain things, certain catalysts that can drive the market. And these are not numbers, these are not charts, these are qualitative in nature. Okay, you cannot really measure them. So next, comprehensive fundamental analysis. So for those who have seen some of my trade report, trade research report, that's basically the level of fundamental analysis that I perform for every single trade that I enter. And it is quite time consuming, and sometimes when I am looking at how retailer are trading, they just look at a chart for 5-10 minutes and they simply enter the order ready, don't really think so much. But on my end, if I'm gonna enter a trade, I will spend about 5 to 6 hours on fundamental analysis. I will spend additional 2-3 hours on portfolio structuring, the trade structure. How should I play this trade? Whether should I play option? Should I play stock? Should I play vertical, calendar, covered call, cash secure put, whatever? What will give me the best risk reward ratio? And on top of which, I also need to ensure that my VAR, value at risk, doesn't burst my risk management level. All these things come into play before I even want one particular trade. And whenever I see things like, oh, you can spend 15 minutes a day, you can be profitable, that is pure nonsensical. That is like what, that is a version of what retailer like to dream. That is simply not possible if you want to be a successful retail trader. Next, options. So, if you have any question regarding options, I'm quite proficient in option. In fact, a lot of my trades are executed via options. Portfolio modeling. So, portfolio modeling is very important. Also, if you are trading at a management level, professional level, institutional level, you do not need to just worry about your individual trade, but you need to worry about how your trade affect each other and your overall portfolio. So, one of the the big difference that I see between retail trader and professional hedge fund trader is that retailer only look at trades individually. Apple can go up or not, Tesla can go up or not. But those that are hedge fund managers, professional traders, they do not look at individual trades. In fact, individual trades barely like bear any kind of importance. But what they focus on is the entire portfolio. So you can think of your portfolio as a soccer team. Every single player need to work well together with each other in order to win the game. So every single position in your portfolio, they need to work together to ensure that your portfolio is moving up. if you have a soccer team that is full of defenders, there's no attacker, then of course, obviously you're not able to score any goal and you're gonna lose. Or if you have all attackers and no defenders, then your defense is very sucky lah, and then you'll let your opponent score many goals lah. So in a way, right, if you are building a portfolio, you need to understand how individual traits affect one another. Your individual traits are not individual event. There is very high correlation between companies and they actually affect how it move, how the stock move as a whole. And based on that, right, we tend to look at our trades in terms of the entire portfolio. Meaning to say that before we even enter a trade or exit a trade, we need to understand how it affects the overall portfolio. We cannot suka, oh, this trade good enter, or that trade can go up, enter. We cannot do that. Before we enter one single trade, we need to do a lot of calculation, a lot of simulation to determine how this one particular trade can actually affect the total portfolio. So that is portfolio modeling. Hedge fund trading strategy. So there are a lot of hedge fund trading strategy out there. In fact, um, a lot of retail traders don't really know what hedge fund is. They just say hedge funds, but in the perspective of retailer, hedge funds are smart money, institutional fund, big money, big fund, big boys, whatever names that they want to call lah. But hedge funds are very specific kind of funds that actually employ hedging strategy. So in order to call yourself a hedge fund, you need to be employing a hedging strategy. And one of the most popular hedging strategy is called the long short portfolio management. Okay, so this is the strategy that I personally use. And those who have come for my course, they will be taught what is a long short portfolio management. Also, because a long short portfolio management strategy will allow you to navigate all kinds of market condition and come out profitable at the end. Meaning to say, right, our return, how much we earn in a year, is not dependent on the overall market itself. So if you are listening, if you are hearing things like, oh, S&P went up 20%, but my portfolio went up 30%, something like that, or S&P dropped 10% this year, so my portfolio also dropped 10% this year, that kind of stuff. But in a hedge fund strategy, in a long short portfolio management, we don't really care what the S&P is doing, what the broad market is doing. We try to um, get as much profit as possible from our portfolio management strategy lah. Okay, so our performance this year is currently at 38.05%. So I will say this is a very, very good performance so far because of all the nonsense tariff situation that ongoing. S&P currently is up about 6%. So obviously we are beating the S&P 500 by a very big margin lah. And I will say this performance actually is one of the better performance that we have over the past 3 or 4 years, and it is mainly because of the volatility that is driven by the tariff situation. Okay, so volatility is very good for traders if you know how to leverage it, if you know how to make use of it, and of course, hopefully, over the second half of the year, if I were to be able to keep up with this performance, then I might be able to get like 70%, 80% return for the year lah. So as a for those who came for the other public webinar that I put up sometime in February or March in 2024, we actually had a total return of 88%, which is also a very strong performance lah. Okay, so on an average level, I tend to get about 40-50%, but if I outperform, then it tends to be around 70-80%, that kind of level lah. So some of the star or my so-called good trades for the first half of 2025. I had a Starbucks short position that came in about $35,000 in profit. But this Starbucks short position was just before the tariff. So when the tariff hits on the what do you call that? What day Trump the shit, I forgot the term already. It's not Independence Day, but what Liberation Day. When Liberation Day hits on 2nd of April, when the market crash, I was holding Starbucks basically at the top lah. So I actually raking about $35,000 profit, and this $35,000 profit was able to hedge out majority of my long position losses lah. So I was also holding some long position, but those positions were sort of offset by the profit that I'm making from Starbucks. So in fact, you can see I didn't really suffer so much during the tariff drop lah. And then Tesla short. For those who know me, I'm very negative about Tesla. I don't really like Tesla, so I'm always looking for opportunity to short Tesla. And in this year, we have two rounds of Tesla short. For those who are in our private group, you probably have gained much profit from this short, also about 22,000. And the real star is a Credo long position, about $27,000 in profit. So Credo is something that I recommended in my public channel quite aggressively also. So if you are in our public channel and if you manage to get this, of course, congrats to you. So today's agenda is, of course, ask me anything as long as it is trading related lah. Okay, so feel free to ask anything. I'll be happy to share what I know. But just one exception, I will not be addressing any generic stock question. So please don't ask me things like will Tesla go up, can buy Apple or not, United Health can buy or not, can buy Pepsi or not, Coca-Cola can buy or not. So those kind of questions I will not be entertaining. Instead, try to make the most of this by diving deeper. If you are more specific, more, I would say, thoughtful questions, like for example, I have 80% in defensive stock and 20% in fixed income. Will Apple or Tesla be a good growth stock to balance my portfolio? This kind of question is very good question. It's a very good question, well thought out question. So I'll be more happy to answer this kind of question than simply just can buy Tesla or not, can buy Apple or not. Okay, so this is take this opportunity to explore ideas, learn more about trading, and ask thoughtful questions to help you go as an investor. And don't use this as a session to try to salvage your back holding portfolio lah. Okay, so without any delay, you may ask your question. So now um I will kindly like to request that you ask your question in public chat. Please don't PM me through Zoom, because when you PM me, I will have another window open, and then I don't want like 10, 20 window where I will miss your questions lah. Okay. So if you have PM me, please ask your question in the main window. So ask away. I have a few questions ready. Let me just go through them. Okay, I'll answer one by one. Okay, the first question, able to explain the drawdown in your portfolio if it is beta neutral? Okay, yes, of course, definitely able to explain, but the thing is that the drawdown is definitely, of course, is affected by tariff also. So tariff in itself is, I would say, exogenous event, something that we cannot account for, is suddenly just come in, and then of course, as the entire market drop, the portfolio will drop as well. And most of the time, we are not really beta neutral. Also, we are not like 100% true beta neutral. We will definitely have some level of either a positive bias or a negative bias. And in this case, when tariff hits, the portfolio happens to be slightly positive bias, which leads to this drawdown. But if you compare it across all long portfolio, the drawdown wasn't as bad as what the other all long portfolio are facing. Because if you look at S&P 500, the S&P 500 actually dropped 20% when the tariff hits, and then I believe from the all-time high it dropped about 25%. But if you look at the overall my portfolio, the drawdown was basically I actually get a lot of profit in the beginning. After that, it just draw down to a neutral level. Neutral level as in my portfolio was break even for the year lah. So it is not to say that a true neutral portfolio is not affected by beta at all. You are gonna definitely affected by beta, but that beta will slowly dissipate as your alpha start to come into play. most of our alpha will come during earnings where we are waiting for good earning announcement for the portfolio to recover or for certain stock to spike up. So until that earning comes, our portfolio is basically just following what the overall market is doing lah. And we try to lessen the influence of overall market by having a certain level of beta neutrality. But still, if a tail risk event such as tariffs were to happen, you are still going to get affected by it. It is just that you will not be affected as much as the rest of the all long only portfolio. What do you think about Singapore stocks, especially REITs? Is there a place for them in your portfolio given that you are getting 38% return? So now the thing about Singapore stocks is Singapore stocks do not have high volatility. In fact, the true issue with Singapore stock is the lack of choices. In fact, I can actually count in my 10 fingers the amount of so-called good companies that I would like to be invest in Singapore market itself. There is simply lack of choices lah. Okay, so I can give you an example. So let's say I am bullish in gold. So recently gold went up a lot. And if I want to invest in gold, maybe I want to buy a gold mining stock. So if you look at the US market, there are over hundreds or 200s gold mining stock. And within the 200, you can choose, you can do fundamental analysis on the one that has the best profit or the one that has the best margin. But in Singapore market, there is only one gold mining stock called CNMC Gold Mine. And even though CNMC Gold Mine actually went up during the gold rally, it did not went up as much as what the US gold miners are going up. And in fact, if you want to trade gold mining stock in Singapore market, you are stuck with that one. You have no choice at all. And that also can get compounded to things like oil and gas. If you want oil and gas within Singapore, you don't really have a pure oil and gas play. Keppel is not really true oil and gas really. You are stuck with things like Sembcorp Marine or currently now known as Citrium, or you are stuck with other stuff like what Rex International, RH Petrogas, all this kind of stocks lah. So the reason why I'm able to get 38% in US market is because there is a lot of choices. There are a lot of growth company that has yet to be spotted by the mass public. So if you are able to spot them early, you can get in before the big run occurs. For example, Credo. Credo was a very good growth company that went up about 200, 300%. So if you get in early, you'll be able to achieve 2 to 300% return within the same year. But in Singapore, there are barely any stocks that is giving you 200, 300% return. I mean, we don't say all the penny stocks lah, which are basically just gambling lah. So there isn't really a lot of choices. So I do think Singapore stocks have a very good place in my portfolio, but they are not for trading purpose. They are more for dividend purpose because Singapore stocks, you don't get the dividend tax lah. Okay, if you are trading US market and you get dividend from US stock, you are being taxed, I believe, 30%. So I do have a substantial um investment long-term investment portfolio, and the entirety of that portfolio is basically the straight time index ETF or STI ETF. Basically I am basically dollar cost averaging the STI for the past 15 years, and it has been doing very very well because STI currently hit all-time high not long ago. But more importantly, the dividend on STI ETF, depending on what price did you get in, if you are able to dollar cost average smartly, you should be getting around 6 to 7% dividend per year, which is a very good, I would say, cash that coming in every year lah. So from an investment perspective, yes, Singapore stocks are good. I wouldn't really go for individual REITs because if you are buying STI ETF, the straight time index ETF, within the ETF itself, there are already like 6 or 7 REITs, so you are already exposed to a certain level of REITs already lah. And on top of that, right, a lot of Singapore companies, especially the banks like DBS Bank, right, DBS is giving you about close to 5% dividend, at the current price, I think, which is about the same kind of level as what the REITs are giving lah, but it is not exposed to interest rate risks or other high gearing risks that REITs are actually exposed to lah. So yeah, that's my view on overall Singapore stock. If I want to bet company earnings via option, what strategy should I use to have the high win rate and a reasonable reward? If you are going to bet earnings, it is also dependent on how do you want to bet it. Do you want to go like Wall Street bet style? Wall Street bet style is very low win rate, but if you win, you can retire already lah. Okay, that's the Wall Street bet stuff. But if you are going for like what you say, reasonable reward, there's no such thing as high win rate lah. Okay, if you are betting on companies earning, you are basically tossing a coin lah. So like if the company earning is good, they share new product, they beat the earning by a big amount, they got new contract, they landed a new customer, then the stock is gonna skyrocket. But if the company fails to deliver some of their key KPI for the year, then the stock is gonna crash lah. Like for example, Lululemon crashed about 20% during the most recent earning. So there's no such thing as like high win rate because you are dependent on what the stock is going to release, and unless you have done like a comprehensive deep dive on the fundamental and what kind of initiative, what kind of challenges the company is facing, right? When you are playing earnings, it's basically a coin flip lah. Okay, so is a bit, your question is a bit contradictory because you are saying bet, but you also want high win rate. So I'm not sure like if you have this misconception that by using option you can alter your win rate to a higher percentage, but it doesn't really work like that lah. Okay, so if you want to gamble on the earning, you have to treat it as a coin flip. Unless you have done a very strong fundamental work and you have high conviction, high confidence level to believe that that trade will go in your direction, then it is a high win rate lah. Okay, so for example, personally, I believe that um, Dropbox Dropbox will crash in the upcoming earning. This is my thesis, and I have very high conviction. So I'm gonna play a trade that is going to reward me the best risk reward ratio in this when the stock eventually crash. But if my analysis is wrong, if it doesn't crash, then I'm gonna lose on that trade lah. So what you can plan for is more on the risk reward ratio rather than your winning percentage lah. Okay, so now the best kind of trade that you can play on a earning is a very simple call option or put option. Nothing um nothing complicated, just a simple call if you think it's bullish or a simple put if you think it is bearish. And the reason is that if you are trying to play some kind of like vertical structure, credit structure, right? If it goes against you, your risk reward ratio is very, very bad, and it's gonna, but especially if you are playing some kind of credit strategy or cash secure put or credit spread, right? If the trade goes against you, your portfolio is gonna blow. So if you are playing a simple call or simple put, you can rest assured that your risk is already fixed. So you don't need to worry about your risk so much because the worst thing can happen, you will lose the premium. You know the amount that you are gonna lose already, so you can sleep at night. You don't need to like get all panicky when the earnings come out. But secondly, a simple call and a simple put, they have unlimited upside. Okay, a simple put have limited upside lah. If the stock drop to zero, then that's your maximum profit lah. But of course, no stock actually drop to zero on earning lah. So I still consider it as unlimited upside lah. So if you have if sometimes earnings, right, the stock can actually jump far more than what you expected. So if you are playing a simple call or simple put, you can actually enjoy that unexpected gain. But if you are playing vertical structure, you're actually capping off your profit, and you may actually get less profit than what you deserve because you played a vertical structure. So the key thing is number one, you do not want to cap your profit. So you do not want any kind of vertical structure. You do not want any short leg within your option. Secondly, you want a fixed risk, meaning to say no credit structure, just a simple call or a simple put. That is sufficient enough. Sometimes the best play is the simplest play lah. Uh, Although a simple call, a simple put is exposed to what I will call the IV crush, where if the stock did not move as much as what the market expected, then your option price is gonna dive significantly lah due to the IV crush lah. But even if that happens, you cannot lose more than your option premium. Your risk is already defined lah. So in a way, you are kind of protected lah. So you don't need to worry so much. Okay, next, Shifu Zou, what was the turning point that helped you become profitable from the initial year of losing to sudden winning? Okay, so this is a very good question, and my answer is actually will, my answer is not gonna benefit me. Um, the my turning point is when I stopped following all trading groups. I left every single trading group on Facebook, on WhatsApp. I don't know back then Telegram was there or not lah, but I just no outside noises. I just get myself rid of all social groups, like all the people chit chatting what they think about stock. I just exited all group and I try to focus on just try to focus on what I think can go up, what I think cannot go up lah. So to be honest, back then I was still a full technical trader. So when I became profitable during that year, right, the market actually recovered significantly from the bottom. So in fact, I wouldn't reward, I wouldn't claim that it is my skill that got me the profitable status, but rather the market itself was actually going up. In fact, during that period, Singapore market was, in fact, a very good market to trade. There's a lot of stocks. But right now, for those who are familiar, a lot of good Singapore company has been delisted already, lah. Okay, so back then, I'm not sure if you guys remember, there's this one little stock called InnoValue in Singapore market. So value back then is about 13 cent, like 0.13, when I traded it. And eventually it went up all the way to $1. And then it got privatized at like $1 something. And I actually, excuse me, I actually got a big profit out of that one trade also lah. So that trade itself was quite, I would say, big portion of my overall winning lah. But nonetheless, right, I will also say that I did do a comprehensive fundamental analysis on it, and that resulted in what I will call a high conviction trade. So now you cannot find value really is nowhere to be found. So now the next big trade that led me to win a big amount of money is this company called Nobel Group. Nobel Group is used to be part of the STI index, the Straits Time index. It is a commodity trading company. Somewhere around 2014, 2015, there was a short sale report that was published by Iceberg Research that says Nobel Group is actually fabricating a lot of revenue and a lot of their profits, and it is actually worth 10 cents. So back then, Nobel Group was at $2. Okay, so I was looking at it. The Nobel Group currently the price at $2, and then this research group is saying it's worth only 10 cents. So now the thing is that I didn't blindly go and short Nobel Group. In fact, I look at the entire report. In fact, there was 4 reports published by Nobel Group, and every single one of the reports are very long. And not only long, it's very technical also. So I actually read through the entire chunk and I tried to understand as much as possible. And back then, right, back then, no, there's no chat GPT. So I actually went down to Singapore Library. I go and take out all the accounting books and then I try to figure out like what's going on lah. So then after like a month of trying to decipher the report, I realized that yeah, that makes sense. So I shorted Nobel Group. So I actually shorted it from like $1.80 all the way down to like 30 cents like that. So in fact, that company did went to 10 cent and eventually it was delisted out from the Singapore market lah. I think right now they declared bankrupt already if I'm not wrong. So in fact whatever that the report say actually came true. So um and as and when right, I will tend to go back to some of the Facebook group that I left. And when the Nobel Group, when the Iceberg Research came out with the short sale report on Nobel Group, right, a lot of traders on all these trading forums, right, they are saying, "Aya, this is a blue chip company on STI index. Cannot be worth 10 cent one. Confirm this group like got something ulterior motive. They are shortists. We cannot let the shortists win. We must hold hand together, fight the shortists. That kind of nonsense lah. Like it was GameStop before GameStop, you know. So I also attribute my sort of success to the fact that I actually left all these group where um when it comes to trading, sometimes collective thinking is actually a bad thing. So I don't want to sound very mean, but if a bunch of stupid people band together, they are even more stupid lah. Okay, so sometimes you just need to get rid of all the noises lah. So I was quite happy that I wasn't in those group anymore. And because if I was still in those group, I will probably not have enough conviction to hold on to those traits lah. Okay, but the most important thing that lead to my overall success back then and even right now in trading is the shift from technical to fundamental. So a lot of people like to say, a lot of traders, retail trader like to say that technical is for traders, fundamental is for long-term investor. That is totally wrong. In fact, fundamentals is extremely valuable and valid for trader. Even like myself, certain trades I only hold for 2 or 3 months, we do 90% fundamental. 10% is technical. Sometimes there's no technical involved. We just feel that, oh, this fundamental sucks. We're gonna short this thing, and then it just goes in our way lah. So the shift of focus from fundamental to from technical to fundamental is very, very important. And eventually, when I was interning at a hedge fund, my experience there is that nobody talk about technical. There's no technical analyst there. There's no head of technical analysis, that kind of stuff, you know. So nobody talk about technical analysis. It's mainly fundamental analysis and macroeconomic analysis. Next question. What specific action did you do from starting trading in 2013 to first profitable in 2016? So, yep, I have answered majority of it, but the second part, yes, it is self-learned. I tend to learn from people that I think were good back then, but now that I look back, now in my current state right now, as I look back, those people that I thought were good back then are actually all nonsensical. So it's not to brag or what, but as you learn at the industrial level, right, you tend to look at all those so-called stock trading guru back then. Got some back then a lot of guru traders lah, like the divergence trader, the zoom trader. Jeff Sun was quite notorious back then. He got into a lot of drama lah. So like all the things that they are teaching as a beginner, I thought, wow, make a lot of sense. Then but as you grow, right, it's like no. Like in fact, I don't know where Donovan Ang go also. He used to be very loud in my Facebook feed, but I'm sure he's still around. But the more I distance myself from all the gurus, the better I get lah. So um, I would say that I did learn from a few so-called gurus, but it is mainly like sort of getting me start trading lah. Okay, getting me to start trading like, oh, okay, you come here and learn this is candlestick chart, or this is a engulfing candle, or this one is called the head and shoulder pattern. Those kind of stuff I did learn from people that I hang around with on Facebook group. But right now, as I look back, I don't really use any kind of chart pattern or candlestick formation. I use none of those really, and in fact, those are what really sort of kind of distract you from learning the actual thing. How are you able to pick up the skill of trading to reach a point of generating consistent income to go full-time trading? So, firstly, my as I mentioned, my first so-called growth is when I leave all the chat rooms, all the social media groups, whatever. I stopped listening to people. And secondly, when I shifted from technical to fundamental, so that was the switch point. But as I got accepted as an analyst, I learned the proper way to do the actual way to do fundamental analysis lah, which makes my fundamental analysis even more accurate lah. And after that, the next level was actually learning options, because options allow you to profit in any kind of market situation. You can model your portfolio to survive in a stagnant market, declining market, bullish market, bearish market, volatile market, non-volatile market, whatever kind of market. Option have the tools available, and with whatever structures that you can actually benefit from all kinds of market conditions lah. So for example, there's this trade called axometry. There's this trade called axometry. I have an entry here, and after I enter, it went up, went down, and then now it's back here again. So it's very close to the entry price lah. Okay, currently the price is very close to entry price. So now, but the thing is that when I enter this, I actually enter a cash secure put options. It's actually an option position. So my cash secure put actually decayed, the time actually decayed to quite a significant amount. And in fact, I'm getting about close to 20K from the decay of the option alone. But those that actually play the stock position, they are not seeing any money. They are basically break even right now lah. So when I tell people that, hey, actually I got $20,000 from Axometry cash secure put, then a lot of people are like, hey, how come you got $20,000? Like the stock didn't even move. It's back to where it was. Precisely because the time decay during this period. So sometimes you need the right tool for the right trade, okay? Because in this case, right, my idea was that this stock is going to go up a lot, but not right now. Right now, I think it's gonna stagnate. It may take a while to go up, but eventually, when the earning kicks in and the second half of the year kicks in, right, all the catalysts will come in, and then the stock will eventually rally. So while it is stagnant, you might as well get some kind of data return, some time decay going in order to boost your profit lah. And if you get assignment, then you get assignment. You sell covered call for more data gains, and then your profit is gonna skyrocket. So these are ways that options can actually help you to get as much profit as you can from a trade situation. So learning options, right, actually push my yearly performance by a significant amount lah. So I do believe that options is something that traders cannot do without lah. You need to learn it at some point. Do you use AI now to help with your fundamental analysis? Yes, I do use AI to help with fundamental analysis, but you need to use it in a smart way, the correct way. So you are not gonna ask the AI can buy Apple or not, can do fundamental analysis on Apple, can I buy Apple? Using fundamental analysis, can I buy Apple? You cannot ask that kind of question lah. So you still need to do your own analysis. You cannot skip the analysis part. But what I use AI to do is to help me summarize like 100-page document. I have a 100-page document regarding the earnings report. And I'm not gonna spend the next 6-7 hours to read that 100-page. So what I do is I will upload that document onto ChatGPT, and I will ask ChatGPT to summarize all the operational catalysts, summarize all the challenges that this company is facing, summarize all the growth initiative that this company is doing. So once ChatGPT summarize them, I will read them, and then I will see whether or not this stock can buy or not, or is it a good stock to trade or not. So the thing is, you can use AI to help you with certain tasks that can make you more efficient, but you cannot use AI to help you analyze for you. You cannot use AI to help you make decision, because if you do that, then like then then your it's not your analysis really. Maybe AI may be right, maybe AI may be wrong, but it is not you that is making analysis. So there's no such thing as high conviction trade already, because you do not have the conviction. You're not the one that make the trade. And like after you use your AI already, right, you also need the basic foundation of understanding of trade structuring on, okay, this is a good trade, how do I play this? Should I do a vertical? Should I do a calendar? Should I play stock? Should I do cash secure put? Should I do covered call? All this you also need to decide by yourself. You cannot ask AI how should I play this trade, because AI is not good at that lah. In fact, I have played around with ChatGPT before, asking certain questions like how can I play this option structure, and in fact the answers are all wrong lah. It's not really gonna give you the best answer. Hi Zor, in your opinion, will you think likely a recession this year? No, no recession. People have been calling recession for like 2 3 years already. Back in 2022, I have people calling recession in 2023. The same people calling recession in 2024. Now 2025, they are saying recession 2026. So I don't think there will be a recession, but there will be slowdown in growth lah. Okay, so what recession technically mean is two consecutive quarters of growth contraction, GDP contraction. So I don't think there will be two consecutive quarter of GDP contraction. Maybe there might be one, but I don't think there's gonna be two consecutive quarters. Okay, we may see a decline in growth, but there will still be growth nonetheless. Maybe the growth is like 1%. Instead of 2%, it's 1%. But they are not going to contract. The growth is not going to negative. Okay. So I don't believe in this recession thing. In fact, US market is still looking quite solid in terms of their job market, in terms of corporate earnings, and in fact, Singapore is also loosening quite a lot of their monetary policy already. And you can definitely see if you are playing T bills lah, Singapore saving bonds lah, like every year, every month, the T bill rates are going down because we are loosening our monetary policy a bit already in order to help people cope lah. So I don't think there will be recession, or rather, my portfolio is not geared to survive a recession now. Okay, but if there is a recession, I will not lose as much as majority of the long only portfolio also, because I do have short position, but my short position are because I believe this company is going to do bad. It's not because I believe market going to crash. What do you recommend a minimum trading capital, starting trading capital? Okay, if you want to trade comfortably, if you want to ensure that the time that you spend trading is worth it, the minimum trading capital is USD $50,000. If you have USD $50,000 and you are spending like 1 hour, 2 hour on per trade idea, you are spending 10 hour per week, 20 hour per week on trading, then let's say you are able to get like 50% return for the year. Let's say okay, 50% return. At the end of the year, you're gonna get $25,000. So $25,000 for all the hours spent, of course, it's not that good. I mean, your full-time job is gonna earn you better, but it is still $25,000. So you still get like a bit of money lah. So you can calculate how much time that you put in, and then you can calculate your earning per hour. And if you do that, actually $50,000 is still a very small amount that you cannot compete with any kind of full-time job that is like at a executive level lah. So, but it is not so small that it will discourage you from trading. So let's say you are somebody with like 10K account and you think you can push that 10K to 100K, 1 million within the next 1 2 year, right? That's not going to happen. In fact, if you have a 10K account, you spend hours and hours and hours, and at the end of the day, your profit is $200. You're gonna feel very demotivated. You don't feel rewarded. So sometime, right? I believe this is a very good question also. Sometimes a lot of retail trader take shortcut is because they don't feel that their time spent is well capitalized, is well used. They spend so much time and then they are only getting $100, $200 like that because their capital is like peanut amount like that. So what they do, they resort to shortcuts, they resort to following guru, they resort to buying automatic trader, AI trader, or trading software that you only need to spend 15 minutes a day, this kind of stuff lah. And in fact, one of the major reason is that they are not properly capitalized, and the money they are getting from a proper process is not good enough. They don't feel that the time that they spend is properly rewarded lah. So if you want to start, 50,000 is, I believe, a good starting point. If you don't have 50,000, $30,000 is the bare minimum, because below $30,000, right, I will feel that you are better off saving first lah than actually starting trading. Of course, if you are like passive investing, then you can start at any amount, like you just dollar cost average every month into a saving plan. That one is fine lah. But if you are talking about trading, right, then I would say that bare minimum 30,000, comfortable 50,000 to actually make sufficient money for you to spend $100,000 USD. Next, do you use leverage? How do you minimize risk through TP and SL and ladder strategy? So now, risk is being managed through overall portfolio level. So, in fact, the whole topic of risk management, I can take 20 hours to talk about. So, let me just show you how risk management is being done. Sorry, give me a moment. I'm trying to open up a file. Sorry, guys, give me one second. Okay, so sorry, I can't find the file, but never mind. I try to answer your questions. I don't want to waste too much time. So okay, so now the question here is not leverage, but rather how much total exposure are you facing. So for example, of course, if you are gonna use options, definitely there will be leverage. If you are using margin account, definitely there's gonna be leverage also. So leverage is definitely involved lah. Okay, but the minimizing of risk is not done through TP or SL level. So for example, if I have a vertical, then if I have a vertical strategy, then the thing is you already know your maximum risk already. So that is your risk lah, okay? So of course, at individual trade level, you need to identify how much are you willing to risk at individual trade level, and you need to set yourself a certain threshold. So my personal threshold is about 3%. If I have a very high conviction trade, I can go to as high as 5%. So if the trade is losing 5% of my entire portfolio, right, that is my hard stop, okay? I will definitely cut off the trade. But that is on an individual trade level. But the thing is, if you are doing a hedge fund strategy, a long short portfolio, you need to monitor risk on your overall portfolio level also. So we are no longer talking about sticking to stop loss lah, what is the TP level lah. We are no longer talking about that already, because now the portfolio is beta neutral. You can have a position that is losing $100,000. Let's say you have a long short and the market is very bullish, so your short is losing $100,000, but the long is making $150,000. So I will consider it as a net win. I am up $50,000. I don't see them individually like, oh, this trade lose $100,000. Oh my god. But it's fine because my long position is winning $150,000. So at a net level, I am still up $50,000. So now what kind of advantage does that give if you have a long short? The advantage is that if the market were to crash instead of rally, then it will be in the opposite direction. My long position may lose $100,000, but my short position is going to be up $150,000. So whether or not market crash or rally, I'm still going to be up $50,000 nonetheless. So if your overall portfolio is managed properly via beta neutrality, long short management, then the individual trade actually don't matter really. In fact, there are some trade that I don't even have a stop loss because they can hit the stop loss, but it would mean that I have a opposing trade that is earning more than what this one trade is losing because of the long short nature lah. So it's very complicated because you need to measure it at a portfolio level. So what we use is something called value at risk (VAR). You can go and Google it. There are some YouTube video that guide you on how to properly manage VAR. Sorry, here VAR, value at risk. Okay, so this is the matrix that we use lah. Next, um, how do you employ option strategy in your long short portfolio modeling? Understand you have paid membership. Are these trade ideas of option with detailed strike price, expiration, entry extension? To your first question, long short portfolio, you can definitely use option strategy. For example, I will have example lah, okay, I'll have four bullish trades. That four bullish trade can be long call, call vertical, simple call, calendar call, all those are the long. And then on the other side, I can have four bearish trade, which can be long put, ladder put, calendar put, vertical put, whatever lah, okay. So I can employ that. It's simply the number of bearish trade versus the number of bullish trade. So I'll try to ensure that if I have $100,000 risk on my on my bullish position, I also have $100,000 risk on my bearish position, because one of them is gonna make a lot of money and it can end up making $200,000, $300,000, and the other one I'm gonna lose that $100,000 lah, because your options, the most you lose is your premium lah. So that at a very rough level, right? That's how you handle lah. Understand you have paid membership. So for question number two, yes, it's very detailed. It's very detailed. But of course, we do not encourage blind copy trader, simply just copy trading without really knowing what's going on. What we do is, the purpose of this is to encourage people to witness how a long short portfolio is being managed live. So you get to see how I manage a long short live using various structure, various option position. And in fact, for the subscriber who have been through this tariff process, right, they get to see how I manage through this very volatile period and still come out plus 40% for the first half of the year lah. So that is the meat of my subscribe paid membership for people to learn. If you are here being mainly to copy trade, like trade setup go up, you just take out handphone, enter trade, like don't really do anything, of course you're not gonna make any money lah. Okay, so now for example, I can share with you, this is the private Discord channel for the paid subscriber. So the trade setup tend to be something like this. then the option position, all the aspiration, everything is there. But of course, the idea is not to blindly copy, but understand why certain structures are being used, understand why certain trades are being made. Since this is a ask me anything, can you tell us how much you make per annum? Per annum. Okay, trading wise, just trading alone, just trading alone. Okay, portfolio only, probably about 200K like that. But I'm not gonna share any other stuff lah. Okay, so if you're gonna ask how much I'm making from Patreon paid subscribers, it's not really a lot. Maybe 1 month about $2,000, $3,000, enough to keep the lights on lah. Interested to know more about how you split risk ratio based on quarterly economic trend forecasting. Example, 30% each risk range like high, mid, low spread among stock, option, and bonds. So are you talking about how my portfolio is modeled? For example, do I have a 40-60, like 40% bonds, 60% stock, that kind of stuff? How many options? If you are asking about that, I don't follow the classical 40-60 lah, okay? For trading portfolio, we don't really follow that also. In fact, the 40-60 is very, very retail level stuff lah. Mainly when people start investing, right, they need to follow something. They need a guideline. And this 40-60 is a guideline that is given to them, which is not wrong. It is actually quite effective also. But the thing is, if you are looking to push your returns way beyond what the market is performing, like you want to beat the S&P 500 by 30-40%, right? Then definitely this kind of modeling is not gonna benefit you much. So on my trading account, I have mostly stocks and mostly options. I don't really have a rule on like 20% option, 80% stock, that kind of stuff. Whether or not something is a stock or option is dependent on the nature of the trade itself. If I need to hold a position for very long, then I'm gonna play a stock position because I don't suffer from time decay. I can sell covered call. If I foresee that the market is gonna be stagnant for the next 2 or 3 months, then I'll be playing a lot of credit based option structures where I can collect the time decay. So it basically just options and stocks lah. I don't play bonds. I don't trade bonds. I have zero bonds. I don't believe in bonds. like I mean, if you can get 10-20% from the market, right? What for you want to put in bonds lah? But I personally do have a significant amount in long term portfolio lah, which is basically the straight time index lah. So the quarterly economic trend forecasting is more of how should I um how should I maneuver my portfolio, whether do I want it to be more bearish, more bullish, or should I remain neutral, or should I be looking at certain specific sector? More of that rather than trying to do like whether or not I want bonds or stocks or what lah. Next, what is the worst drawdown and consecutive loss in your trading day? Can it be due to personal bias, blind spot in analysis, and as the long shot supposed to be neutral to market conditions? Okay, so now the long shot is supposed to be market neutral, but it is not going to be market neutral every single day. There will be some days where the long are going down, the shorts are going up, you're gonna lose on both sides. It does happen. So try not to have the misconception that if you are long short, you are practically immune. It's not that. There are still other risks involved. There are what we call idiosyncratic risks. So beta neutrality only protect you from market risk or what we will call systematic risk, but you are still exposed to what we will call idiosyncratic risk. So these are two things that you can go and Google. So sometimes there can be just very bad days where all your long position are down and all your short position are up, and like there's no, you can't find any reason, any news. It's just like that. So it can happen. And of course your questions is easily answered by having a VAR. So when you do a VAR analysis, you can actually go and calculate what is your worst case risk in a day, what is your worst case risk in a week or in a month. So we actually do a VAR analysis on daily, weekly, and monthly. So as long as my daily is like lesser than 10%, which is considered very high already, I'm actually quite comfortable. So at any point in time, right, I know my VAR value. And if my VAR value for one day is like 15%, 20%, right, then I am going to shift my portfolio, or I'm going to sort of like lower my risk before that risk actually take place. So understanding how VAR works is very very important also. So if I have a threshold for VAR for multiple levels, and if my portfolio exceed that level, I'm gonna remove the exposures lah. But of course, from time to time, I do get blindsided by certain companies that I feel is very strong fundamental, and then I end up losing money. Then okay, the first loss, fine, and then I will go and try again, and I will lose again. But of course, the worst case I will lose two time lah. Then I will not go for the third time already lah. So I don't really get drawdown more than 10%. uh Maybe sometimes can go to 12, 13%, but usually around there lah. But the drawdown and the VAR are closely monitored so that before the drawdown happen, I can start de-risking already. How do you overcome it to get positive return? Like there's nothing specific that you will need to do lah. If you know what you are doing, if you understand, if you have a proper process, right, you 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 just keep doing whatever you're doing, or eventually you will get back the money lah. So in this case, I'll try to ensure that my fundamental analysis is correct. And if I lose a lot of money on certain stock, I'll try to understand what went wrong. Is there a fundamental blind spot that I missed? Was there information that I missed out that caused the stock to go down? So I'll try to look for those kind of um, data points, and I'll make sure that next time when I am doing similar trades, I make sure I don't run into the same kind of issue lah. On your portfolio optimization, do you look at code integration across the asset? Not really, not really. For fundamental, if the company is doing good but involved in whatever negative case, you look at it as a chance or you will not touch. This is very specific, case by case basis lah. Okay, so like what kind of negative case? Like the first question that you need to ask is if this negative case is it gonna affect the revenue of the company? Or like for example, if a company is being investigated for faking revenue, right, of course I'm not going to touch it lah. But if it's some other stuff, then I may use the knee-jerk reaction when the stock drop to get a good entry. So it's really really dependent on case by case. How do you filter stocks to trade as there are so many choices? What trigger you to action? We do have a process, but I cannot share the process with you here. If I share the process with you here, then I mean, uh, I mean those who came for my course will kill me lah. I mean they pay a lot of money lah. But I can share with you enough for you to go and find it out for yourself. So mainly, um, we filter stock through earning potential, earning growth and revenue growth lah. And then we will look at PE ratio also. These are the three main things that we look at. What do you track in your journal? How do you review your data within? Trading journal, very simple. You need to track your. Okay, so now the trading journal, it depends on what level are you at. If you are at a higher level, right? The trading journal is more for tracking your live position rather than tracking your close position. So at live position, I need to track multiple things. For example, I need to track my VAR. I need to make sure that my VAR does not exceed my threshold. I need to track my correlation across all my position. If the correlation is very high across all my position, then that there is a risk where if the market crash, all my stock is going to move at the same time. So I cannot have a certain level of correlation. I need to check my portfolio volatility because if my portfolio volatility is very low, then I'm not going to get any profit. It's not going to move. But I also need to ensure that my portfolio volatility doesn't run so high that my VAR exceed all the threshold lah. So these are the three things that I will monitor. But these three things are live position, meaning to say I am my trade journal is more of a live position rather than close position lah. But of course, in the past, monitoring close position is also good because you need to pinpoint certain trades that exceed your risk level, and you need to understand what happened there. But there isn't any really specific data that is very important lah. So of course, trade journal is important, but there isn't a magical data that you need to track. You just simply need to track like how what is your win loss ratio, what is your holding period. Holding period is important for me also. I also track holding period. If my holding period across my trade is like 4 5 months, right, then obviously I'm doing something wrong because most of my trades I want them to be within 1 2 month time frame. If not, I might as well become investor already. I'm not trader already. So I do have a so-called a requirement that my trade need to move within the next 2 months. If it's not moving within the next 2 months, then it means that I did not identify catalyst clearly. My catalyst identification is wrong. I did not enter my trade properly at the right time. I may enter it too early, then end up holding it for too long. For VR assessment, next question. For your VR assessment, you perform simulation runs on your portfolio. So, if you are using interactive broker trade workstation, it is able to help you perform VAR lah. So it's actually quite simple lah. It depends on what kind of platform you are using. If you are using all the what I will call the kiddie platform like Tiger, Moo, Weeboo, all the animals, then of course those platforms will not have the functions lah. But if you are using things like I believe Tasty Trade or back then what's that Think or Swim when when Think or Swim was available to retailer, but interactive broker trader workstation actually have a lot of good enough risk management function. What is the performance for 2024 full year? Understand the last share trade journal end on July 2024 on my Facebook page. You just shared 2025 H1 is this Zoom. Okay, 2024 full year I actually shared already. In fact, you can even go and find it right here. This is public channel, my Discord public channel. Oh, sorry. Here, here. Oh, so sorry, not this. This is 2023. Where did I share? It was somewhere. Where did it go? Where did it go? I did share it somewhere. So sorry. Let me go and find it. Because I recall sharing it. There, here. Yeah. 85%. For 2024, it was 85%. The highest it went was over 100%. But towards November, December, the performance wasn't good lah. So it dropped back to 85%. So you can come and view this video if you want. Must pay income tax or not? Yeah, I do pay income tax because I'm a PR here. As a PR, I cannot live for free, or I feel bad to live for free here. If I don't pay tax, if I don't pay CPF, my PR will not get renewed. So it's not really permanent lah. Okay, a permanent resident, but not really permanent. There are some terms and conditions lah. So I do pay tax, and my tax has been um quite big lah. Okay, quite big. Have you been consistently profitable for the past 5 years? Yes. How do you let how to let you manage our funds and minimum amount? Currently, you can't do that because the current private fund is basically the funds of people who have been with me for many many years lah. They trust me with their money lah, and because the thing is, this private fund that we are trading our own money. So when and everybody have the understanding that we are trading our own money, or rather they are letting me trade, but it is our money. So from that perspective, we don't really need any kind of MAS oversight or MAS licensing. But if I am going to accept funds from customers, then we need MAS licensing, and that is our next step lah. We are looking to get the MAS licensing in like the next 5 years lah. It's not something easy to get because you need to show certain understanding on the regulatory process, and of course the ability to manage funds lah. So it will probably be in the next 5 or 6 years time. Currently right now is not possible because to be honest, if I don't know you well enough, I'm not gonna take your money lah, because when things turns bad, right, things can be very ugly lah. So I don't really want to anyhow take money also. When you say you made 200K from trading alone, is that SGD or USD? Out of curiosity. It's USD. Because I'm trading US market lah, so everything is in USD lah. But of course, with the current decline in USD, right, it kind of affect my overall earnings also. It's quite bad lah. Do you do crypto? No, no crypto. My view on crypto is very negative. I'm not the person you should look for crypto. I'm a strictly no crypto person. Do you trade invest in blue chip stock like Nvidia, Apple, that have very high PE? Okay, so now to be honest with you, Nvidia and Apple don't really have very high PE on a relative level lah. Okay, there are a lot of companies that have even higher PE. So now the reason why we don't trade blue chip such as Nvidia or Apple, right? It's because they are already very mature. Of course, Nvidia still growing lah. But company like Apple, right, is considered very mature already. So you're not gonna get like 1,000% growth, 500% growth from Apple already. No point trading that. Same thing for Nvidia. Okay, maybe Nvidia still have chance lah. But there are a lot of lesser known names in the US market that have the ability to actually grow tremendously. Like for example, there are some company maybe they're in the early stage of their growth, and eventually they can become the new Nvidia that can grow up to like 20, 30,000%, those kind. There are definitely a lot of stock out there, so we want to trade stock that have not yet grown. So big names like Nvidia, Apple, Microsoft, they already grown to a very very big size already. So in a institutional term, there is very little opportunity for alpha generation, uh, because everybody is trading those stock are part of index, part of ETF, part of a lot of other unit trusts. So it's very crowded. There's very little opportunity for them to give outsized growth. So what you want is you want companies that not really a lot of people know, but they are doing very well. So you buy that company, and then eventually when people start to take note of this company, right, then they are gonna skyrocket like crazy lah. So one of the winning trades, for example, a lot of people wait is the a trade that we took this year, Credo. So if you look at Credo, it's a very small name, nobody know. But if you look at it from the early of 2024, right, it's about 500% within like 1.5 year. You cannot get 500% from Apple or Microsoft or Amazon or whatever lah. So if you think Apple has high PE, Credo have even higher PE lah. I don't trade blue chips. So because blue chips, if you're gonna trade blue chips, you might as well just buy S&P 500. Is well diversified. Your risk is managed already. So there's no point for me to trade blue chips lah. Which trading platform you mainly use? Which one is the best? Why are you so negative on crypto? Do you mind sharing? No, I don't really want to share why I'm negative on crypto, mainly because I might end up renting non-stop. So I'm not really gonna share it, but you can definitely see some of the posts that I made on Facebook lah regarding crypto lah. So you can see that lah. I used to use Tiger. Currently I'm using Interactive Broker. Mainly everything is on Interactive Broker, but I also use City Index. But currently is known as forex.com lah. Okay, they changed their name lah from City Index to forex.com. So I do feel that if you are advanced, interactive broker is actually very good. There's a lot of advanced features that interactive broker provides, such as calculating your VAR, calculating your portfolio beta. You can calculate you can stress test your portfolio. You can do what if situation, which in a lot of other retail brokerage does not have lah. So I do believe that IBKR Interactive Broker Workstation is very close to the professional hedge fund workstation that a lot of the hedge funds are using lah. How you spot unpopular potential stock? So as I mentioned earlier, we will seek them through potential earning growth, potential revenue growth, and PE ratio. What lifestyle changes do you have to make to become a good trader? For example, do you change your lifestyle like sleep in the day, stay awake in the night? So firstly, I did not travel in my 20s at all. I only start my traveling in my mid 30s. So while everybody is posting, oh, travel young, you can make back money. I was actually trying to make money then lah. Okay, so I really dislike that quote, travel young, money can be made back. Yes, money can be made back, but you cannot make back compounding interest. If you lost 2 3 years of compounding interest, that's a few million. If you actually live up to like 70 years old, okay, you cannot make back that few million that you did not save. So I did not travel in my 20 at all. I was actually very frugal back then in trying to save up a trading account. But fortunately for me, my full-time job was a shift job, meaning to say, I work 12 hours a day, but I only work 3 days a week, and I work weekend, so I actually took the weekend shift. So not only I'm making quite a lot of money from weekend shift allowance, I am free during the weekdays in order to sort of learn trading lah, monitor the market lah. So in fact, even though I trade US, right, I don't stay awake to trade. I stay awake to like sort of just see the market, see what's going on Bloomberg, but I am not really like buying, selling, scalping, that kind of stuff. So in fact, right, if I'm on a holiday, I can have my portfolio with all the open position. I don't need to look at the market at night. I can still sleep very soundly. It's just that I just want to participate in what's going on during the US opening market, because sometimes if you are listening to Bloomberg, right, that is where you can actually get a lot of trade ideas. Maybe they will say something like, oh, like recently the US just passed the big beautiful bill, and in the big beautiful bill there's actually a lot of funding going into defense, US defense, and from there maybe I can play a long position on Boeing, I can play a long position on Lockheed Martin. So these are areas where I will get trade ideas lah. So I stay up late not to scalp or trade, but to just see what's going on. Yeah, mainly FOMO lah, mainly FOMO about what's going on lah. So one biggest lifestyle change that I have to make, or I personally made, is at some point I'll be opening Bloomberg 24/7 lah. Okay, so in the past I have three monitor. In fact, I have two monitor, one TV, and the TV is Bloomberg 24/7. So like there's nothing else playing lah. Okay, so in fact I am quite obsessive when it comes to learning trading, but I don't see the obsessiveness as a lifestyle change because that is what I want to do. But imagine somebody who just want the money but they don't enjoy trading. I don't think they can go through that process lah because like it's not really I would say exciting lah. Do you buy S&P 500 ETF? No, I don't buy S&P 500 ETF mainly because S&P 500 ETF is growth. Is S&P 500 is growth lah. Okay, so if you are looking for growth, you can definitely buy the S&P 500 ETF. Um, my trading portfolio is my growth ready. So I do not need another growth portfolio. So my trading account is my growth portfolio because I'm specifically going for all the high growth stocks that are not the blue chips but those smaller names but still high growth. So from there my trading account is like a hyper growth kind of portfolio lah. And I do STI ETF because I want the dividend, I want the cash. So is for different purpose lah. So if you are a passive investor, right, and you do not have the time or the skill to go and find all these high growth stock, or you do not have the skill to trade, then buying S&P 500 ETF is fine because you do need exposure to growth. So the reason why I buy STI ETF is mainly for dividend purpose, because I don't have a dividend portfolio and it's good to get some form of cash every year lah. I find the STI ETF very solid lah. Actually, a lot of people look down on Singapore market, but I do find overall Singapore market very good for dividend only, not for anything else. Do you have more free time after learning how to trade consistently or also managing a private fund in the progress of getting licensed with MAS, or is it like full-time job like us? How many trade do you make per month? Is it based on allocation? If full, then able to do other things freely. Come be when the option expire. Come back when the option expires. Free time definitely. I would say, I would not say more free time, but I would say that you are not at the mercy of your boss lah. Like you don't want to trade, then don't trade lor. You want to like okay, just want to take off for the day, then take off for the day lor. So you can do that lah. But of course, sometimes if I am lazing around too long, then I'm gonna miss a lot of trades lah. So at some point you will still definitely want to put in the time to go and find certain trades, go and research trade ideas. But I will always be there when the market open lah. So 9:30, 10:30, I will always be there. Like there's no exception lah. So I would say I'm more free in the morning, afternoon, but during the night I will be glued to my PC lah. So yeah lor. uh still I will say equivalent to a full-time job, still equivalent to a full-time job in terms of the amount of hours, but there's freedom lah. There's freedom in that you can leave your desk whenever you want. You can like just go and sleep in the middle of the day, that kind of stuff lah. How many trades I make per month? I can't really tell you how many trades I make per month, but per year, there's about 80 trades lah. Okay, so currently on our paid subscription group, we are the latest trade is now at 39. So we are already in July, so you can agak-agak calculate lah. But each year we will make about 80 trades like that. It's not really based on allocation or whatever, but um, we will try to maintain a full portfolio lah. So whenever one trade goes out, right, we have to make sure that another trade goes in. So we cannot have a portfolio that is not at full capacity, because if it's not at full capacity, right, the beta neutrality is gone, everything is lopsided, and then it's very hard to manage lah. Which main source do you go to for reliable info when analyzing company market? As I read online, some news might be triggered by large fund manager to move the market. Okay, so now the first thing that you need to understand or learn when you want to trade professionally is you need to get rid of the idea that there's somebody moving the market. There's a dark syndicate that every day meet up in a dark room planning how to screw the retailer. You have to get rid of that mindset. There's no big boys, there's no syndicate, there's no fund managers trying to manipulate the market, that kind of stuff. There's no such thing. In fact, I have asked quite a lot of actual fund managers from Goldman Sachs or from JP Morgan. Like when you tell them, right, they will laugh at you like what's this person saying? Like, no, there's no such thing. People are just trading. There's nobody meeting every day to screw up the retailer and like manipulate the market lah. Okay. So now main sources. The so-called the industry standard source is still Bloomberg lah. Okay. So I go for Bloomberg, but when I am extracting data, if you have the money, you can get it from Bloomberg terminal, which costs like 25,000 per year. But if you are like cheapo, like me, I usually extract my data from Quifin. So I use Quifin quite extensively because it's very good for data extraction lah. Like for example, if you want to look at what is the global yield, you can kind of see what are the yield curve like, everything. So I will look at this lah. News, for news, right, I will mainly stick to Bloomberg. You have Class Weekly together search for potential stock. No, I don't have Class Weekly. So as I mentioned, right, I don't believe in um I don't believe in this kind of social group where we search together, everyone what together, because I don't want to sound very arrogant, but up until now I cannot find people that will do the work as rigor or as thorough as I want it to be. So I have tried to search for people to sort of what together, but nobody until now nobody is at that level lah. In order to do the way things I want them to do. In fact, I can give free courses. I can teach somebody. I'm willing to teach someone all the thing for free if that person can do research the way I want them to do. But unfortunately, there's no one. Will there be spare cash left from portfolio for better opportunities, or is it fully entered into position? What do you? No, it's all entered. But of course, I can't enter 100% of my portfolio lah, because it's a margin account. So or certain short position require margin, certain cash secure put require margin. So probably about 30% of the portfolio will remain as cash, but that cash cannot touch lah because it's there for margin purpose lah. So the thing is there will always be something one. I can tell you there will always be something to trade one. But the good thing is that if there is opportunity, it will be in the backlog. So once a trade is hit TP level, we want to exit the trade, then whatever in our backlog that is ready to go, it is there. It will be ready to go lah. Okay. There's no spare cash lah, because if you are putting spare cash for opportunity, at some point you're gonna take that opportunity, then the spare cash is gone lah. So there's at the end there's no spare cash left. Don't pick players. Put iceberg order that is visible in order books. Yeah, I mean it's visible in the order books, but for example, these are all your order books, lor. These are all the big stuff. I mean, these are earnings, lah. You can see whenever earnings happen, there's a lot of volume coming in, lah. But these are all your order books, lor. But what are you going to do with all these? So I don't believe in volume analysis. I don't believe in volume spread analysis. Um, I asked I have talked to one person from Renaissance Tech before, and I asked them what they think about volume spread analysis. They reply back, what the fuck is that? So it's really what retailer thinks of trading versus what actual professional trading is a giant gap. It's really a big chasm. There's so much. Like a lot of retailer think, wow, volume profile. Like I see people drawing the volume profile to find where are all the smart money compiling at all those kind of stuff. But the thing is, it doesn't exist. What retailer are looking for that? Yeah, I see people doing this kind of stuff. Oh my god, smart money accumulating here, wow, here buy but then wow, somewhere here buy but all this, it doesn't work. It simply doesn't work lah. Like traders are looking for all kinds of funny things that they think is important, but like when I ask them to actual real traders, actual professional traders, they will ask me like what the fuck you guys have been doing. Like no, we don't do all this. May I ask if you notice any change in your mindset as a beginner trader since the start of to the present? What are the key mindset you feel that is needed to be a successful trader? Yes, one of the key mindset is a very selfish mindset, but you do have to have this mindset, is that I am right. Like my analysis is right. I did this analysis, so I am right. And whatever anybody is saying, I don't really care. So like sometimes I will put up a trade. A lot of people come and tell me like a lot of stuff, but I don't really. I mean, I listen, but I'm not gonna follow whatever they are saying because I put in the work. This is my analysis. This is my trade structure, and I have hedging position against this trade. My portfolio is able to support this trade. I'm gonna go with this trade anyway. If it doesn't turn out right, then it's fine. It doesn't turn out right. Our the risk is already accounted for. But I'm not gonna change my decision based on what other people are saying. So usually when people in retail term paper hand like scared to hold or when they are easily swayed by other people's is usually due to the fact that they don't have their own process. They never do their own work. They are just following. So because they are following, right, they are at the mercy of other people opinion. Like is when you see people asking in forum like, hey bro, you still holding or not, you still holding this position or not, that kind of stuff like, hey bro, you cut loss already or not, that kind of stuff lah. So um one thing is that firstly you must have the commitment to do your own work. You must have the rigor, but once you have those rigor already, right, you must have the confidence in your own work and you need to start to stop listening to everybody else. Doesn't matter if it is Adam Khoo, doesn't matter if it is myself, it doesn't matter whoever, doesn't matter. You did the research, you did the work, you have to trust your work. And and the the next mindset is that how should I put it the next mindset is that I stop looking trades as an individual level, meaning to say every day when I open up my portfolio, right, I am not looking at which trade is earning money, which trade is losing money, which trade doing good, which trade doing bad. I will look at my overall portfolio. Is my overall portfolio green? If it's green, then good. Like then okay already. If it's red, if something is, if overall is red, then some of the trades are not performing good enough. So I will go and like see whether or not if it is something that is like broad market macroeconomic related, like maybe the interest rate change, then the whole market kind of knee jerk reaction, or is it like there was unemployment rate spike, then suddenly market panicking, that kind of stuff. So I will try to go and find all the reason why maybe market is behaving in a certain way. But I pay less attention to individual trade. I model risk at a portfolio level. I look at profit loss at a portfolio level. But of course, individual trades, the work is still there lah. The fundamental work is still there before I even take the trade. But the moment I take the trade, really, right, I don't really care about how the trade is performing. Really, I care about the overall portfolio as a whole. Because as I mentioned, right, if you are doing long short portfolio, one of your short can be losing $10,000. But if your longs are making $15,000, you are still net win. So it's a very different mindset lah. For those students who you have mentored and the subscriber in your community, have you encountered anyone close to your high standard of trading? Take for example, when you reach the a stage of taking in public money to trade, will you consider taking in more analysts to perform as well as you? Yeah, there are. I mean, there are a couple. There are a couple, three or four of them. That does have the level of quality that I want. But the thing is that I will also admit that this is not something that like you do it casually. Also, there's a lot of time involved. So if you have commitment, like your full-time job is very demanding, you have family, you have other commitment, that is very hard, extremely hard to put in that time lah. So while in terms of quality, I do have quite a number that is able to put up the quality level of work, right? They will probably take like the entire week or the entire month to put up that one report. And that report is of very high quality. But they cannot do it consistently because of life lah, and that's I mean that's not their fault also, that's not to blame them also, it's just that it's very demanding lah. So when you are talking about analysts, I do employ an analyst, a full-time analyst, um but that analyst is like severely underpaid lah. So and mainly because to be honest, the amount of money that you can actually earn from a 800K portfolio, right, is not a lot. And I mean, I can't pay somebody 100K in a salary when if my profit is only like 300K or 400K for the year, I cannot pay an analyst 25% of the entire profit for the seller. So I do have analysts, but the analyst is severely underpaid. But she's doing the work lah. She's able to churn out sufficient trades lah. And in fact, quite a lot of trades that I took this year, and trades that I have been sharing with in my so-called graduate, my subscriber group, is actually what do you call that, is being shortlisted by my analyst. For example, one of the best trade that I have, Credo actually, I entered here and I exited somewhere around here. It's about 95%. It was spotted by my analyst. This is one of the best trade. The other one is Argon also. Argon, personally, I didn't enter it, but she spot this trade and it actually went up like 121% within like 4 5 months. And one other trade, Cintas, was also founded by my analyst. So these are all the names that you probably are not familiar with. These are not Apple, Nvidia, but these are very good companies that have really strong returns lah. One more question. What is the trigger events indicator for you to recommend long USD? The trigger event indicator is the job data that came in the last Friday, fourth of Friday. So when the job data came in, it was still very strong, and it seems like Federal Reserve may not be cutting rate in July. Maybe they may only cut rate in September, or initially there were supposed to be two rate cuts, but maybe it may end up only one rate cut. So with that, right, the interest rate differential is very big between US and other countries, and that will actually strengthen USD along the way lah. Okay, so a lot of good questions. Thanks for those very, very good questions. And I'm really glad that there's no United Health can buy or not, Apple can buy or not kind of questions lah. Okay, so I'm gonna it's 10:55 now. I'm gonna wait for another 5 more minutes for any last question. If there's no more, I will proceed with the rest of my presentation now. Okay, so the rest of the presentation may take another 15 minutes like that. So bear with me also lah. So I will answer remaining question until 11 and then we will move forward. Okay, what is the time frame you choose most of the time for call or put option? So this one is really dependent on your process. So for my process, my trades are 2 to 3 months long. Oh, sorry, 1 to 2 months long. So I will try to um go for 3 month expiration option. Most of my option have 2 to 3 month expiration, and that is based on my process, my time frame within my process. Do you mind sharing if you have an end game in mind? Like, do you intend to trade till certain portfolio size or till certain age or I mean, I don't really have like a specific end goal in mind, but my current plan right now is to get a MAS license. And once I get a MAS license ready, right, I will want to do a much larger hedge funds where we will do like a funding. So maybe I'll like I don't know, I'll aim for like 100 million portfolio in terms of funding lah. And once I get sufficient funding for 100 million portfolio, I will close off all the funding and then I'll just trade that 100 million portfolio lah. Or I mean if there's more than 500 million or 1 billion, I don't know lah. Depends lah, depends. But of course we aim small first lah. We aim small first. But I would definitely want to still manage my own portfolio rather than to go join like JP Morgan or Goldman Sachs or James Street because I mean it does seems like the work life balance not there, the stress very high like that. I think one advantage of managing portfolio is you can do it until like you're 60, 70, 80. Like I mean look at Warren Buffett. He's like I don't know how many years old already. It just stress your brains lah. Like you don't need to carry heavy loads like physical work. So I think age don't really have a limit lah. As long as my brain still working. Lor. Okay, guys, so it's 11. I will stop taking questions ready. So let's just go through the remainder of the stuff, lah, okay? So now potential trade bagger for 2025. So these are some of the trades that I personally have spotted, and I think they are very good trades, lah, okay? So since we are doing a long short portfolio, or my strategy is a long short portfolio, there will be one long position, there will be one short position, lah, okay? So for those who are not familiar with short position, I highly encourage you go and like at least find out what is short selling before you start anyhow shorting, lah, okay? Because short selling is not something to play around with, to mess around with. So now, disclaimer, you are responsible for your own entry, exit, and your trade execution. Our view on the stock may change if new information deem it no longer viable. We may or may not take the position ourselves, but I will tell you now, I have the position. We may place hedging trade against that position, and we have no obligation to update or review new finding or our position on the stock lah. Okay, so please don't like PM me on like suddenly PM me on Facebook and say, hey bro, this stock you still holding or not? You still holding or not? So um, I will share the stocks, but please like take care of your own risk and or your own exit entry whatever lah. Okay. First one, axometry. So this one definitely you guys will know I shared just now already. So axometry, XMTR, what on earth is this? So this is a AI powered global marketplace for custom manufacturing. Mainly things like 3D printing, injection molding, all this kind of stuff lah. Okay, so you can think of it as carousel, but on carousel people are selling fake Rolex, fake iPhones. It's a marketplace lah, but on axometry platform, it is more for industrial people, industrial players, where if you need certain custom 3D printing or custom injection molding, but you do not have the machinery, you do not have the mold, you can go to the marketplace, you can find someone who have, and then they will do it for you lah. Okay, and like you will get a quote from them, and then they will do whatever stuff that you need for you lah. So it is a marketplace for industrial players. So it connects 70K buyers with 4,300 vetted supplier across 50 countries. So they offer enterprise software like TeamSpace, supplier tools, work center, and industrial advertising like ThomasNet. Why it is a good buy? Because in the first quarter 2025 revenue is up 23% year over year. The marketplace revenue is up 27%. So this is actually very strong growth. And they are adjusted EBITDA turned positive with 27% incremental gain. So there's strong enterprise traction also. There's 7,000 plus teams using TeamSpace, and high spend accounts are up about 12%. So they are benefiting from reshoring and tariff driven demand for US based manufacturing. So they're also launching a high margin feature in H2, ad tech revamp, some international quoting tools lah. Okay, so with this feature coming in the second half, I do think that the second half is a time where this stock is going to go up lah. These are is the time where majority of their growth initiative will come into play, and they are also expanding into production grade services like injection molding, die casting. So currently right now they do have limited services, like mainly limited to CNC, 3D printing, all this, but in the future they are expanding more and more lah. Okay, so they will onboard more supplier, more customers, and there'll be more industrial service available. So the key metrics, they earn 151 million in revenue. The gross margin is 37.3%. There are a total active buyer of 71,000. The average revenue per user is about $1,908. So this is actually a very high ARPU lah. Okay, so they actually raised their 2025 guidance to more than 22% marketplace growth a full year, and within 2025, right, they are guiding full year profitability lah. Okay, so Axometry is a tech company. So a lot of new tech company, right, what they do is they will usually operate at a loss. Every year they are losing money. But the reason why they are losing money is not because they are not profitable, but rather they are purposely losing money because they are spending a lot of that cash that they have on R&D, on customer acquisition, on sales and advertising to get as many customers as possible before they aim for profitability. So for example, even Tesla at one point they were loss making for many years, and the reason being that they are building all the gigafactory. They are spending money in R&D. Even Grab at one point was loss making also. I think recently they were loss making also, but the reason is that they are spending a lot of their money on customer acquisition. Okay, so when this kind of growth company, when they have decided that they have expanded enough, they will shift the gear into becoming profitable. They will make sure that at the end of the year they start making positive earnings really. And when they start doing that, it is usually the time where the stock actually goes up like multiple folds lah. So I would think that will be this year for Axometry. So isometry is digitizing a massive legacy industry with scalable tech, growing recurring demand, and what on earth is that? Sorry, oops. And a clean path to sustain profitability, a high upside play on AI and manufacturing modernization. So nowadays, right, a lot of things become AI, a lot of things get digitized, like now, like all the delivery service get digitized, the cab service, taxi service get digitized, but this is one area where there's not really a lot of competition. Nobody is in this space yet. I mean, there are people in this space, but they are not like big players lah. So Axometry is actually trying to sort of um, take advantage of this huge legacy space where things have not been really digitized yet. And once they are able to do that, right, they will be the first person, the first mover, lah, okay, the first mover advantage, and that will propel the growth to quite a significant amount. So if you are looking at this chart currently right now, Axometry is at $35. If you are looking at the technicals, you can see it is uptrend. Currently came down a bit, but it is sort of recovering back up, lah. Okay, the where's my drawing tools? The price is above the moving averages. You can see the MACD line crossing, almost crossing back above the signal line, so the momentum is going back up again. And you can also see the RSI bouncing off the 50 level, which is usually tells you that the momentum is bullish. Okay, so my price target is 50, more aggressive price target is 60. So this is year end target, okay, year end target. So, but I mean, if we move to 50 by next month, then of course good lah. But this target is for year end target lah. So from 35 to $60 is very close to like 80% gain within like the year itself. So I do believe it is extremely high growth, and the potential is there lah. Of course, it can definitely go a lot higher, but if you are looking for a much higher level, then you probably have to hold longer lah. Okay, so I'm not saying enter right now. Please go and plan out your own entries lah. Okay. JJ, as I mentioned, right, please take care of your own execution. We are not here to give specific trade instructions lah. Next is a short position. So this is a short selling position. So Dropbox. So I'm not gonna share what Dropbox do. I'm sure you all know what Dropbox does really. It's like I'm sure you all use Dropbox lah, okay, at some point in time. So now the core issue with Dropbox, the earnings is artificially inflated by debt-funded share buyback. So now for those who know share buyback, Apple does a lot of share buyback, Google does a lot of share buyback. It is a good thing, but it is only a good thing if your company has a lot of cash with nowhere to spend. But unfortunately for Dropbox, they are doing share buyback using debt. They are borrowing money to buy back the share. It is equivalent to somebody borrowing money to trade and then losing all that money lah. Okay, so so it's not good because now Dropbox is $2 billion in debt, but at the same time they borrowed a lot of money to do the share buyback. They actually have to pay 90 million annual interest per year. Okay, 90 million just the interest alone, so it's quite jialat lah. It is a huge stress on their cash making capability lah. And their equity actually is negative since 2021 because they spend so much money on share buyback without having the cash to do so. Next, the cash flow is overstated. So nearly 50% of the 2024 cash flow are from non-cash items such as stock-based compensation and depreciation and investment gain. But the thing is, their investment inflow is unsustainable also. In the past, they put in a few hundred million into their investment vehicles like treasuries, but now they are putting less and less money into their investment vehicles because they are using their money for share buyback. So in the coming year, they will not be getting as much cash flow from their investment lah. So the lesser the cash flow is, the lesser money they have to bear the annual interest that they took up lah on the debt that they took up. Challenging guidance for 2025. So there is actually a net loss of 300,000 paying users. So in fact, a lot of people using are paying to use Dropbox. They are no longer subscribed already. They cancel their subscription. They have flat to declining revenue and average annual recurring revenue. There's no material revenue contribution from their AI initiative Dash in 2025. So they came up with this thing called Dash. I don't know what it does lah, but they are not earning any revenue from it yet lah. But apparently, what Dash does is it consolidate all your document across multiple platform, whatever it is. Like, let's say you are using Windows, you are using Google, you are using Adobe. It consolidate everything together. I don't know how it works lah, but I'm not sure how it can like improve their business. So there is structural weakness in terms of business also because what Dropbox provide for a fee, other company are actually providing for free. So for example, things like Google Drive, Microsoft OneDrive, and Box, they are actually providing whatever Dropbox provide for free as part of a bigger package lah. Okay, so there's actually intense competition, and Dropbox don't really have something that is unique to them also. For example, yes, they can do e-signature, but DocuSign can also do e-signature. So there isn't really anything that is niche that Dropbox is providing lah. So a core offering is no longer differentiated. Revenue are reliant on small medium businesses, and usually small medium businesses are most vulnerable to macro pressure and churn because when interest rate is not going down, when inflation goes up, the group of people who are affected the most are the small medium businesses lah, because they don't really generate so much cash. So the EPS growth, the earning growth is driven solely by buybacks, not business performance. But the buybacks itself is being fueled by debt, which is bearing 990 million interest per year lah. So their position is really their current position right now is quite bad lah. So now share buyback may slow due to rising interest burden and cash flow pressure. There could be a earning downgrade risk if Dropbox halt the buyback. So buyback is the only thing they have it going, and if they suddenly do not have sufficient cash to continue their share buyback, right? Then there is simply no reason to own this stock already. Everybody is gonna dump this stock lah. Okay, so the Dash AI initiative is still early stage and is under competitive threat from other companies lah. So conclusion, Dropbox growth story is fragile, built on financial engineering, not fundamentals. The company faces subscriber churn, rising debt service costs, weak organic growth, no near-term AI revenue. A short opportunity is emerging as earning risk reprice the stock. So now, Dropbox currently you can see coming down already. The price is below the moving averages, the momentum is on the downside, trend is on the downside, the MACD line is below the zero line, so you can see the momentum is going down, RSI also going down, so everything going down lah, okay, so technical wise everything is going down. So my potential target for this is 24.50 or $22. I think $22 is very possible lah, okay, so this is on the short side. So these are the two trades that I personally have very very big positions in order to because mainly because these are what I call my high conviction trades lah. Okay, so please, if you are looking to do all this, buy short or buy or whatever, please do so responsibly and make sure that you know what you are doing, especially when you're short selling. If you don't know what on earth you are doing, then please don't go and do stupid things lah. Okay, please don't FOMO. Make sure you understand what you're doing. Sometimes I have people trading options and they don't even know what option is. Like they have no idea what it is, but they are just blindly copying because they just want the money. And so please don't be those kind of traders, lah. Okay. So before I end it off, I just for those who are new, for those who are listening to me speak for the first time or engaging with me for the first time, these are some of the various ways that you can sort of engage with us. Okay, so the best is still Discord. So please join our Discord. This is the Discord link. So I'm gonna share this slide with you. Okay, I'm gonna upload this slide in the chat. So please go to the chat and download it. Okay, I uploaded already. Okay, so now Discord channel is the best place that you can come and join us lah. So we have the public area. The public area is for those who are not subscribed lah. You are just here to hang out lah. You're not paying any money. So even in the public area, right, we do share certain traits lah. Okay, we do share traits once in a while. We do share certain views, so you can always come and like hang out here. If you PM me in Discord channel, I am more likely to reply because I don't really look at my Facebook messages. But if you are a subscriber, if you are a paying subscriber, then of course you have access to all the other stuff like the private channels lah, where a lot of our discussion goes down lah. Okay, so Discord is our main platform for engagement lah. We don't have Telegram, we don't have WhatsApp group. We mainly use Discord. Okay, next is our Patreon. Our Patreon is the monthly paid service. So if you want more in-depth stuff like weekly webinar, trade report, you want to know exactly what we are trading, what kind of stuff we are entering, you want access to our private Discord channel, then this is actually a paid service. You can go to patreon.com and you can go and subscribe to us, okay? Then Nimbus Capital website, this is our official website, but I don't really do anything there, okay? But of course, if I'm giving trading course or do one-to-one mentorship, then you can come and register here. So I am looking to give a one trading course maybe sometime in September, August, September, like that. So if you are interested, you can consider joining. Yeah, I will post up the information there lah. Of course, Facebook group is the group that you all know lah. Okay, if you are here, you probably came from that Facebook group lah. So you should know already lah. Okay, is this one lah. Okay, so most likely you are from this place lah. YouTube, you can go to our, we do have a YouTube channel, but I actually stopped uploading for a very long period of time because this year is awfully busy year. So I have not been regularly uploading YouTube video lah. Okay, but this particular session will go on to YouTube video, so you can go and view the recording there lah. Or you can email me if you have any inquiries regarding whatever lah. Okay, you can email me. So next, I want to also share forex.com. So forex.com is city index lah. Okay, So previously, City Index is a CFD platform. So I do work with them, and I'm quite on a good relationship with them lah. So sometime when they have like promotion, I usually share also lah. But of course, you are under no obligation to go and sign up for anything lah. Okay, it's my job to share. But if you don't want to sign up, then you don't sign up lah. But if you sign up, then of course good also lah. Okay, so now currently they are having this promotion where if you deposit $2,000 and you trade 1 million worth of index, forex, or commodity, you will get cash bonus of $200. Or if you deposit like $10,000 and you um make a trade of total of 220 million, then your cash bonus is about $2,000 within the 60 days lah. Okay, within the 60 days where you get your account. So in fact, this is actually very easy to get one. So you may think, wow, 1 million very big. How to get 1 million with 2K accounts? Yeah. In fact, it's very easy. So I'm just gonna share with you lah. Okay, like example lah. Okay. So one contract of Nasdaq costs $22,500. So since you are trading Nasdaq, you only need to put up 5% margin lah. Okay. So in order to buy one contract of Nasdaq, you only need to put up $1,000. So now when you buy Nasdaq, you also need to sell lah. At some point you need to sell lah. Okay. So per trade, right? Per trade meaning buy and sell, you actually made a $45,000 worth of trade lah. But your cash margin is only $1,000. So in order to hit that 1 million value, right, you need to make the trade 22 times. You will hit 1 million already. So you buy sell 22 times, you make 1 million already, and you'll get the $200 cash bonus lah. Okay, so now in order to make 22 trade is quite simple. If you like just scalp in out like everyday scalp like two trades, you scalp within like 11 days, you get ready lah. Okay, but of course I'm not teaching you to go and do that. If you want to do that, fine. But if you can organically hit 22 trades, good for you also lah. I don't want you to go and scalp and then later market crash, you end up losing more than $200. So I mean, it is just to let you know that $1 million trading requirement is quite easy to achieve lah if you have a sufficient account. Of course, if you are trading two contract, three contract, then you need even lesser trade lah. Okay, so if you are interested, you can sign up for an account at forex.com. The you can use the QR code. I'm gonna leave it there for like 10 seconds. If you are interested, go and use the QR code and use that link lah. Okay. So I'm gonna leave it there for 10 seconds. After that, I'm just gonna move forward lah. Okay, so yeah, that's it. That's it for today's session. So the PowerPoint, in fact, there's nothing in the PowerPoint lah, okay, except for the two trades. So the PowerPoint and the recording will be uploaded onto our Discord channel under public videos and article. So do join our Discord channel, okay? Because sometimes we will have public events, like we will meet up, and I do hope people can attend also lah. So like there's always something going on lah. Okay. Okay, so by tomorrow, I will upload everything here. You can access them here. So just join our Discord channel lah. Okay, you can find me very easily here. Also, I will respond. But a word of warning: there are a lot of scammer on the Discord channel. So the moment you join, right, somebody with my name will come and PM you, ask you how you are doing. You want to sign up for crypto account? Please don't go and do all those. I will never PM you. I will never PM anybody on Discord channel one. So if somebody PM you, right, that person is not me. And moreover, right, I will not ask you to sign up for crypto account or I will not ask you how you are doing with your trading. I won't do that. Okay, I'm too busy. I'm too busy caring about my own trading to care about other people trading. Okay, so just be aware of the scammers and be vigilant. Okay. That's it, guys. So thank you all for attending. Hope you guys like able to get some level of additional knowledge which you previously have not been exposed to. Of course, if you truly want to learn the institutional hedge fund trading, we do have courses coming up, and I can say that the information we provide is totally different from what is available out there lah. Like we don't care about technicals. We spit on technical, we throw technical in the dustbin. We don't do things like count candle, those kind of nonsense. It's really what actual traders are using in Goldman Sachs or JP Morgan, or with the information that you have learned, you can actually use those knowledge and get yourself into a trading firm. If you got an interview and they ask you certain questions, right, what you learn in our course will save you. Okay, you're not going to a trading firm and then they ask you what is your trading strategy, you tell them, oh, I'm a swing trader using volume spread analysis. You will get kicked out from the room like immediately. Okay, so those are not the kind of things that the professionals are doing lah. Okay, so see you guys in I don't know in wherever lah. Okay, on Facebook, on Discord, or if you're coming for the course, wherever lah. Okay, I'm always around. So once in a while, I will do all these kind of public videos. Hopefully, I will see you in the futures lah. The course is in SGD. It's in XGD, not USD. Yeah, thanks, Coco. Thanks everyone. Have a good night. Bye bye.